Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, June 5th, 2023. I am Frank Ochoa, aka PivotBoss. Happy Monday, everyone. Here's a look at the ES in the daily time frame right now. Very narrow overnight range so far. Super narrow, trading around the previous week's close price, previous session's close as well. Just 12 and a quarter points of range. Just 12 and a quarter points of range. That's super narrow heading into the RTH open. That's 23% of average. So less than a quarter of average range heading into the RTH open right now. Super narrow price action. But for the most part, this market is sitting above new highs. Highs not seen in quite a while. Not since last summer, last August of 2022. We do have numbers coming out here pretty soon. Services PMI, factory orders, ISM non-manufacturing PMI. That could provide some volatility early this morning. But for the most part, we are compressing at highs. And I'm going to pull out the weekly chart here for a moment just to show where we are on a weekly chart perspective. We have pushed through significant resistance here. And this is the highest levels we've been since, again, last August here, where we had this big, massive, explosive bar that pushed through resistance just like we did last week. But then look what happened in the week that followed. A failed new high and a deep close back within the bar. And then now price drops back within the range. So one thing that we'll want to keep an eye on this week and moving forward is price. Can it stay above last week's midpoint? Because if price pushes back through that midpoint, the midpoint being 42.35, and we close below it for the week, it could be a major trap, very similar to what we saw last time, and that could at least open up a return back toward 40.60 and year-to-date VWAP. And again, there's the potential to snap back to break even on the year, which is prior support. So this is going to be a big time level. If price can continue to hold above this zone, we may have a clear path to continue higher. So that's a higher time frame look at it right now. Range bound at the moment. Look to avoid the chop. We may get some volatility here with some numbers, economic data coming out soon. If we take a look here at the NQ, this one has been super strong as well, but only trading 28% of average range right now. So the ES trading at 23% of average. The NQ is at 22% of average, or 28% of average range right now. Narrow 2-day range here. We also, as developing, we also have again narrow range just day over day. Very strong overall trend. Super bullish. This trend intensity is very bullish. The one time it tested the 8 period, exploded to the upside over here as well. Been very strong, and now we're sitting above that level, holding at highs. And again, we mentioned before, to break through recent resistance here at 14 and even before that 13 plus opens up a continuation toward 14.822. 14.822 is not too far off. That could be hit literally this week in the best case scenario. So we do have targets that take you right up to 14.820, which is the 75% weekly bullish target, and 14.920, which is the next target up. So there's a 100-point target zone right in here for the week that we could see price attempt to go get. So again, any early weakness could be an opportunity to buy the NQ for a continuation higher. The NQ remains unfadable at this moment, although we are at R3 resistance here on the PivotBoss band. So we are overvalued at the moment, but continuing to demonstrate very bullish price discovery properties with 14.822 likely ahead. If we take a look at crude oil, this one's up 2.65%, a tremendous gap and run. This is on news that Saudi Arabia is dropping demand, or dropping supply rather, by 1 million barrels per day, I believe. So this is a big time move after that news to gap up and take you right back up after things were starting to drop. You started to see a bit of weakness overall, which could have opened up new lows. We mentioned right here that this could be quite bearish if it can't get back above 70 soon. And here we are popping back on news over the last 3 days, a tremendous move. So again, This is a tremendous headline that could open up a continuation that takes us back again, as was the original target zone before, 76 to 77, and then a continuation to 80.5 and likely 84. So going back up the range, up again. So that could be a big time continuation here. So Saudi Arabia will reduce its output by another 1 million barrels per day starting in July, which again has pushed price higher here in crude oil and could open up a continuation toward the top end of the range. Again, when you look at the wider range, we've been trading in this larger range for some time, and it hasn't really gotten out of that range. This has been the range here. We did kind of trade a little bit below 70 a couple times, so maybe we've widened it a bit here. But the middle of the range is next, with an upside continuation toward the top. All right, let's take a look now at gold futures. Gold here has struggled to find a strong low. It has found this strong high right at the previous year's high, impulse high, and dropped back, pushed back to and through the key range low, and here early this month has failed to get going to the upside. This wasn't the strongest low, although we did turn around decently off of that low. Not the strongest by any means. So again, how is price going to play out here? Are we going to see a push back above that takes us to the upper portion of this trading range, or do we start to see a price eat through value, year-to-date VWAP, and the 1940 edge, which opens up a return back down? If you followed us during our monthly market outlook last week, one thing we did look at was the monthly chart, and last month's sell signal here was very reminiscent of the sell signals we've seen a couple of times before at resistance, and it led to at least a 1 to 3 month continuation to the downside. So in order to break that, price would need to close back above 2,000 this month. If not, we could be looking at further weakness up ahead. So selling the rotations could be, any rally could be an opportunity for bears to defend and sell for a continuation down. An overwhelming push through 1940 opens up 1830 very quickly down below. Lastly, taking a look here at the YM. The YM trading a narrow range right now, 26% of average range, developing extreme reversal sell signals. So big oversized bar here for Friday's range, and then now you have an opposing bar and a smaller range on the next day. That can be an extreme reversal that develops. Obviously you have the rest of the day to kind of build that out, but if we close lower today, that signal will stick, and it could be a sign of a snapback based off of this strong low here and the rally we've seen. If today can become a strong high, or perhaps tomorrow, we may have a midpoint pullback here that gives us a new key range here. We are already working off of this key range back here and have already reached the middle of that zone. So again, seeing how we play out here. Overall, this market has been very quiet. It has led lower, but it did have a tremendous squeeze here on Friday. That squeeze was significant because up until that point, we had been trending down for a full month, and we're on lows with the potential to see more weakness ahead. So a massive squeeze takes us right back up, but we're right back in the center of this range and continue to chop around the break-even point for the year. So right here, again, great squeeze on a Friday. Can price remain bullish off of that squeeze, or do we just continue to see more chop with a downward bias here out of the YM? All right, that is it for now. We'll see how this plays out heading into the new week of trading. Good luck, trade well, and I'll see you in the trading room. Take care.